Good morning, good evening, good afternoon, traders. Steve here, Logic FX Trading. Welcome to our FX analysis on Tuesday, the 5th of October, nearly said of September, October 2021. Let's just start with our economic calendar. As usual, guys, we had Reserve Bank of Australia interest rate decision overnight. As expected, came in at 0.1%. In other words, no change. But they've also said that they're not going to do anything until February. That's when they'll have their next review. What else we got today? And we'll talk about that again in a moment, guys. Then balance of trade in Canada today. Tomorrow we've got interest rate decision in New Zealand. So it's a Reserve Bank of New Zealand. Now, this is where it gets interesting. I just pulled up a couple of news stories here, guys. This is the first one. Australia's central bank holds as East Coast reopening looms. They've had a lockdown due to COVID. It kind of came a bit late for them. Maybe it was something to do with the winter-summer thing, where the winter last year in the UK and North America got panned by COVID, and it looked like the South wasn't going to get it. And then they had the flip situation, although their winters obviously aren't anything like Northern Hemisphere winters. But there you go. Now, what they've said is that Reserve Bank Governor Philip Lowe kept cash rate at 0.1% as expected at Tuesday's meeting. Lowe cut weekly bond purchases to $4 billion last month. Now, that's probably the reason why we said. Now, remember, last month I wasn't on the game, guys. I took 5 or 6 weeks off, first break I've had in 3 years. So I wasn't 100% sure of what was going on. And I did say at the time, I think we'll start recording again last week or something. I did say at the time, it's going to take me a few weeks to get up to speed of what's going on, what's happening. Bit like you've missed a few days at school, you've been off sick for a week, you got to catch up on what's going on. You get into lessons and people are talking about stuff, you go, what's going on here? That's what I'm doing, catching up on what's happened while I had my eye off the ball, guys. So here we are. Last month, they cut their bond purchases, which is possibly the reason why we saw the big move up in the Aussie against the New Zealand. Now, if we look at that chart, no, before we do that, let's look at the other news story, which is Reserve Bank New Zealand set to raise rates even as Delta outbreak shackles the economy. So they're also in a lockdown of, in Auckland anyway. Much of New Zealand's rural, so I think the rest of the countries can go about what they're doing, but Auckland is certainly still in a lockdown. But they're talking about increasing their interest rates purely and simply for something that was also mentioned in the Australian story, which was that their housing prices are going through the roof because of the low interest rates, obviously. And but they've kind of decided that that's not as big a problem as, controlling inflation. So maybe there's other ways of controlling, property by either making it more difficult for people to get mortgages or increasing the amount of deposit that they have to have and things like that. So that's the route that they've taken. And for similar reasons, New Zealand decided to take a different route, which is to increase interest rates. Now, they're not going up massively, guys, but it is a shift from one to the other. 0.25% on Wednesday. Reserve Bank policymakers will raise official cash rate by 0.25 percentage point on Wednesday in Wellington, according to 20 of 21 economists. Okay, so it looks like that's what they're going to do. There's no question that the situation is grimmer than we all assumed back in August. We thought we were looking at a relatively short, successful lockdown, and then we would be COVID-free, and that's not likely at all anymore. RBNZ had its finger on the trigger of rate increase in August, but held off because New Zealand entered a nationwide lockdown on the day of the decision, posing a communication challenge. Most of the country has since exited lockdown, but the outbreak continues to fester in largest city Auckland. So there you have it. Now, so what does that mean? Well, it gives you a little bit of insight into this. If we go back to here, this was September, 16th of September. This could be the bond buying, the cutting of the bond buying by the Australian Reserve Bank. It's the reason why we got that move, guys. But if you look at this from a way back here, this was the strengthening of the New Zealand. So New Zealand are now going to hike rates. So does that mean that we trade this short? Well, the problem with it is, guys, is that it's probably been priced in through here. But we don't know that. But in all likelihood, because I sat and looked at this before we, obviously before we started recording, and I thought to myself, well, do you know what? That looks like it wants to go long. And we were calling it long. And then I read the two stories and I thought, maybe I've been looking at this incorrectly. Let's just take this and put it down there. And at the moment, I don't know, guys. But what we'll do is we'll keep an eye on this. I would like to trade this long, guys. But with that potential interest rate decision, you say to yourself, well, are you really going to trade against that? So I'm going to have to hold fire on it. But we'll see what happens. If this alarm starts going off today, I'll maybe just start to trade this long. The difficulty I have with alarms with New Zealand and Australia is that they tend to go off in the middle of the night when I'm not, when I'm sleeping. So I don't tend to get the same response from alarms or effectiveness from alarms there as you would in, Europe and North America. So I thought that would have given me, when I read that story, when I saw those headlines that they were going to hike, I thought, let's short it. And then I had a little think about it and I said, well, that may be the reason that this has happened is because it said there in the article that they had their finger on the trigger back in August. So if we put August into this, July, August in here, it was already on its way down. But if they had their finger on the trigger here, then that's possibly it priced in there for another, let's say, I don't know what date, say this date. So August through to September through to October, it's 2 months, guys. The other little thing I'm thinking about this is, and the reason why I'm dwelling on this, guys, is if we can get this figured out, we could well have a few months of trading this in the right direction, which could be profitable. And I tend to like to trade it long, to be quite honest. I don't know why it is. I just have a bias for trading it long. That was a bit unusual, but that was the lockdown. That was the lockdown. And maybe New Zealand didn't have any COVID and maybe Australia had, and that's why that moved in that direction with those two. I don't know. There's so much going on at the time that I wasn't really paying much attention to this, guys. But other than that, this hasn't been that low for a very long time, which was the reason why over the last lot of weeks, if you say this is generally where it turns in and around here. Now, this is on a daily time scale, so obviously those little moves could be really big on a 1 hour time scale, guys. But other than there and there, that tends to be the turning point, which is what we hit last week, guys. Which is another reason why I was thinking, well, this could just, could do one of those or one of those. or that, or that. You see the way it goes when it comes down into that area. But the only thing's put a dampener on it for me is this story here, that they're going to raise rates, but it's possibly already priced in. Give me another little bit of time in this, guys. If I get an angle on it, certainly we could have some nice trades trading this back up again. Now, it's not going to go in a straight line, guys, but at least you have a trend on something. But it might not turn out to be right, guys. That's why I'm hesitating. If you look at this, possibly, look, there's possibly one more in there, because that's a 1, 2, 3, 4. And there's possibly one more in there, guys. So it's a bit dangerous at the minute to try and trade that, based on the information that I have at the moment. Okay, right. Sorry, thought that would have been a bit more conclusive there, guys. Japanese yen, let's go down into the 1 hour time scale and see what's happened there. We're still in the little pullback. Let's clean it up a little bit. So for me, if this is going to continue short, then what it's doing at the minute is setting up to go short. And of course, it will do whatever it wants to do. But we were looking at this structurally and saying, well, it would come in there. And it looked to me like it was going to drop out the bottom, which it did. But you like these things to have a little bit of a quality about them. Sorry, that wasn't it coming in. That was part of that, what to me looks like a running flat. There's it coming in there, guys. So I'm now wondering, do we have, and not necessarily be that size, but do we certainly have a move back down into there? And if we go out to the daily, you know, it's been down as low as that, which is 80. And I'm not suggesting it's going to go down there, guys, but it's not like it hasn't been there before. That's the point that I'm making. Could it come down into there? Yet again, if we establish that as a trend, then there'll be a lot of trading negative on the Japanese yen. But we're working at it at the moment, guys. I'm not saying anything definitive other than, yes, the dollar's going long, but the dollar will go long for a period of time before shorting again. And that will be determined by when the European Central Bank starts to taper. So what we were looking for earlier in the week, last week, was when we got to here, I did say, listen, don't be trying to trade this long because it's going to correct, guys. And that's what it's done so far. We've had a little bit of a push up, but do remember, when you get something that looks like that, often they do that before they go. So there could be another little downside. That's why we've got the circle there, folks. So I'll just clean it up a little bit so we can see what's going on underneath. Need to start posting these, guys. So for me, that's the trend. It'll not necessarily come all the way down to there, guys. You know, if the trend could end up steeper. So it is possible that that's it. But you know, when you get an impulse like that, generally they're not over. You usually get another. You'll get another one. It'll either come there, maybe break it, and then go. So be wary of trading long there. Okay, so I'll not be trading the dollar long, but I'm also not going to trade against the dollar at the minute, because for me the trend is long, which means that it should break short here, but it's about the timing of it. And you'll see this structure over and over again, guys. Remember that there's nothing 100% about a structure, but Elliott is as much about not getting into a trade at the wrong time as it is about indicating when's the right time to get into it. So when you see something like this, for me, generally there's another push up before it drops. And I can show you lots and lots of examples of that. Now, The one chart that I know inside out is this one. So if I'm ever looking for examples, I tend to come to this one. We can go way back. I remember it was here. See that one? So that was trend. Came down, come up, and everybody started trading it short there, including myself, guys. And then up it went and went and went. And then we got our fifth wave, guys. So that's the little structure there that I have in my mind. Doesn't mean that it's definitely it, but I'm kind of thinking maybe that's what it is. And therefore, I'm not trying to trade that short from there. Different time scale, guys, but as you know, Elliott, or these charts, should I say, it's not Elliott, are fractal, which means that they repeat themselves on every time scale. The same structure appear over and over again on every time scale. So I wouldn't be surprised if we got another little leg down there before this went low. And there again, little push up there before that goes long. And the pound, oh, this is a little steeper than what I drew there, which is okay because we were just looking for a pullback, guys. I have a bit of a concern about the pound, guys. The UK economy starting to look a little bit like stagflation, which isn't going to be good for the economy, which means that I'm not sure they're going to see too much foreign investment when it's in that sort of situation. Although you could look at that and say there's more upside to that. And possibly there is, but I think eventually it will drop when the dollar starts to move long again. Aussie. Let's have a quick look at what's going on under here. Might just bounce out. It might end up bouncing along. Leave it. New Zealand. Well, there's a little bit of a reaction on the New Zealand, maybe due to that that talk of the industry at the session, but I don't think so, guys. I think that's priced in. I think that's, where was that? There was August there when they looked like they were going to pull the trigger. Look at it. And then everyone realized they weren't going to pull the trigger. So you've had the drop again. So maybe it's come back down, could push up. But the problem is that it's against the dollar and we're expecting the dollar to go long. So I'm not going to try and trade that. US CAD. The alarm went off yesterday, pushed down a little bit, guys. But yet again, it looks to me like it could possibly bounce back and forward here. I don't want to trade against either of them. The CAD strengthening with the oil price. This looks a little bit nicer, guys, because this is what we were looking for from last week. It was a correction down here and then for it to push on up. Yet again, we just need to keep in mind what we were saying about the possibility of this coming down and then going again and then going, guys. So I'd be happier if it come down into there. It doesn't mean it has to go, but I'd be happier trading it long from down there. Yen, yet again, looking for this to go long. The reason I'm not having the same reaction to this is that there's a bit of weakness in the yen at the moment. So rather than getting that, it could end up just hanging around here for a little bit before going. But I think this will go long. Gold. Your guess is good as mine at the minute with gold, guys. The part of the reason that gold's become so difficult for several reasons. One is that we haven't been through this artificial recession before, guys, a deliberate recession, which is what the pandemic was. So everyone's kind of guessing about how we're going to come out of it. That's the first thing. The second thing is gold now potentially has Bitcoin as a rival. And situations where you would normally say, hey, well, when that happens, you'll get a move to safety, because there's a lot of money coming out of the stock markets. Stock market's been horrible this last 2 or 3 months, guys, and it's continuing. Horrible, horrible, horrible. So that money has to go somewhere, unless obviously some can be leveraged, but a lot it has to go somewhere. And usually that would go into precious metals, guys, but it's not happening. And we'll look at Bitcoin in a minute. And the only reason that I look at Bitcoin, guys, isn't because I'm into cryptocurrencies, but because there is that potential that it becomes the new gold. And we're going to look at it over the next few years and see, and obviously listen to the other experts, and see if that's what the case is, and therefore we could start to have some fundamental reason behind moves in Bitcoin, because at the moment there aren't really any fundamental reasons that Bitcoin even exists. I mean, we had Jamie Dimon come out again and basically said there's no real value in it, you know. As Christine Lagarde also said, there was no real value in it. So what you'll probably find with Bitcoin is it will be regulated massively, guys. And once it starts getting regulated, it could have an effect of one or two effects. One, it could make it more attractive for institutional investors, but then it'll make it less attractive for those people that are using it for nefarious reasons, you know. Right, let's move on. Silver, clearly doing the same thing as gold. Looks like there could be a bit of upside to it, but I wouldn't be convinced. There's the trend at the minute, guys. You need a bit more than that to say that the trend's finished. Now, I'm in silver. I would love it to go long. I've been getting pounded by it, that and gold this last 2-3 months, guys. I knew there was a drawdown coming in the stock markets. Thought gold and silver would get a reaction to that, and so far they haven't. But there you go. That's trading, folks. Bitcoin's pushed on up another little bit. That's a 5 wave there, guys. 1, 2, little running flat there, up. Another little flat's pushed on up. Could be a little bit more upside to it. Wouldn't look for much. In fact, that's probably fully done there, guys. If you're looking at just that, because your 5th wave usually comes in around about the same length as your first, in a situation like this where the 3rd's clearly the longest wave there. I'm just looking for, there we go. So if you do that and you bring it up, yeah, could be a little bit more upside to it there, guys. Before you get a correction, then we'll see is the trend going to continue. The one thing I do have in mind, if we take this out, is that we're still within this corrective structure, and therefore, you know, it's difficult to see it going any further up. So that's incorrect. What I'm saying is that because it's up against the top edge of that structure, it's not a place to get involved in it. Certainly it could push on up and then come into there, and then that would be the next place it would be dangerous to trade. What I've been looking at is this and saying, well, is it going to do this? And if it did that, then I'd be very interested in it, because then you have a long way to go before it reaches its previous high. Now, the other thing with Bitcoin, guys, is that the huge money to be made in Bitcoin's been made. Even if Bitcoin went from here at 50,000 to 100,000, you've only doubled your money. Whereas when it was $100 or $200 or even $1,000 to go to 50,000, you've gone 50 times your money. So don't be jumping into Bitcoin because you think it's going to make you rich, guys. It won't at these levels. But if it came down to, well, even down to 20,000, then and it did happen to get to 100,000, then you've done 5 times your money. Those are a lot of ifs and buts, by the way, guys. But the point of it is that don't blindly jump into it because you think it's going to keep going higher. There are other things that you get as good a return on, if not better. Not recent, not in the past, but going forward from here. If you'd been in it from down here, let's say when it was around 10,000 and it went to near 60, didn't it? 60, near 65,000. Well, that's 6.5 times your investment, guys, provided you hung in. Chances are when you got this happening here, you would have sold out. And then when this happened, you would have got out of it again. So it's always easy to look at the chart and go, hey, we could have done this, but you wouldn't have, guys. Because at some point, if you were hanging in, you would still be in, you'd be back down here. Or there. And maybe when it got to there, as it dropped here, you would have chickened out. So unless you're someone who can afford to just hang on to things forever, traders don't hang on to things forever. Traders get in, make some money, get out, get in again, guys. So don't fool yourself that you would have made 5 or 6 times your money there. Ethereum. Same thing. It's at the top of that structure, guys. I'm looking for it to drop purely and simply because that would be a place that would be worth getting involved in it. It could break out and push on up, folks. But that would be where I'd be interested in buying it. I certainly wouldn't be interested in buying it there. Oil, as we said, it's broken out. It's pushed on up. It's causing major problems with inflation around the world and possible stagflation. But there it is. It's continued to push on up, guys. And therefore, that's good for the CAD. Euro CAD continuing to push down on the 4 hours. I don't necessarily see a setup for it as it were. Well, maybe there was a little setup. It's pushed on down, guys. Could be a little running flat and it's going to fall out the bottom of it. We'll just go quickly through these, guys. I've spent a bit too much time talking there. But that's what we do here. Sometimes we just fly through the charts. Other times we dwell on the reasons why we're looking at a particular thing. Euro was. Yeah, I'm looking for that to go short. Euro New Zealand. Looking for that to go short. And there maybe that could be due to the interest rate decision there, guys. Euro yen. Nothing much to write home about there other than I expect the euro to move up against the yen. Once that little correction finishes, the one we were talking about in the end. Euro Swiss, not sure about. Pound CAD, not sure about. Pound Oz, not sure about. I keep flip-flopping in the pound at the minute, guys. So I'll just leave the pound for today. Pound yen, maybe. But there's probably better trades than pound yen. Aussie yen, looking for upside in that. Aussie New Zealand, well, we talked about that. I suspect it's going to drop again from here, guys. Aussie Swiss, but I don't think I'll be trading it. I'll see. I like trading it, but we'll see. Aussie Swiss, not sure. Aussie CAD, I don't trade that. Swiss yen, continuing to push on up. And I think it will continue to push on up, guys. Or at least run flat. If it runs flat, well, then you'll be stuck in it for a while, but I don't think you'll lose your money. CAD Swiss. just looking at that structure, if it dropped down to here, that I'd be interested in buying it there. I think I actually got into it yesterday, guys. I'm just about in the green with it. Yet again, that was a little. I'm in love with this pair. That's why I got into it. But sometimes you need to be careful, because when they don't stack up technically, it's not necessarily a good idea to trade it. So I'll maybe just take that one off again. CAD yen, well, that was the one I was actually trying to trade, but because of where it was, I didn't want to get in there, guys. The place to get in should have been down there somewhere, and then traded up there. Either you've hit your target by there, or you've certainly got your stop loss at zero. New Zealand yen, I think that'll continue on up. That actually might be a half decent trade today. New Zealand yen. Because we're looking for long against short. Yes, at the minute the yen's pulling back, but I think there's more downside to the yen, and there may be more upside to New Zealand whenever they announce their interest rate hike, guys. And that's what you're getting there. You're getting that start of a little move there. It's still early enough for me, because there would be your initial target. There's plenty in there, guys. New Zealand CAD. And there's New Zealand also spiking up against the CAD. But, with the oil prices going up, this could end up just bouncing along flat, guys. So I wouldn't trade that. New Zealand Swiss, there's it pushing up nice against the Swiss as well. But if you have a choice between the Swiss and the yen, I'd go with the yen. And that'll do it for today, guys. I'll speak to you all again tomorrow. Bye for now.